Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro market update for March 6, 2025. My email address is marketmripro@gmail.com. Some of you know me from my long-standing YouTube where I was using hgsidoc@gmail.com. They both work still. Thursday was a pretty tough day for the bulls. It felt like capitulation. It felt like it was babies out with the bathwater. Now, I asked myself the question as I looked at it, was this a bear trap? Well, we'll find out on Friday. Futures are up a little bit. Could this be the beginning of or part of a short-term bottom? I think it might. Does it change my belief that we're still going to go lower? No. But at some point we're going to bounce. We'll take a look at what we see. Just a quick note, some of you may have already tried to sign up for my seminar that I'm doing on Saturday, where I'm going to look at all the platforms that my tools are in, from wealth charts to TradeStation, TradingView, Market MRI Pro, and I will go through my philosophy of trading, some of the things that I've learned from very smart people over the years that helped me do okay, and then spend a little bit of time on the new app that I came up with Praveen, the Market MRI Pro app, and how I use it to shorten the amount I have to do. So let's kick this off and take a look. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education and not be considered investment advice. The intent of the video, and pretty much all the videos I do, is to let you see how I use various tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. You have to assume that I may own, be long, short, be selling, be buying any stock I mention in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools in multiple platforms, but am an independent trader. If you're looking for the wealth charts video, I'm going to do one right after this, and I'll have it posted at becomeabettertrader.com in the morning. They've been really good to me, and I enjoy using the software and giving out my market thoughts on a daily basis when I get an unusual week like this one where I've stayed in Florida. There's a change here, and that change is, it's not a big change, but we're going to end up staying at the Residence Inn in Tustin, Orange County. It happens to be across the parking lot from the Fairfield. Greg Mills at gam72054 at AOL.com. Talking with some of my friends that are educators slash traders, and what I would expect is I will be live and spend half the time. Dev, who's a really good trader, will be there some. Chris White, will hopefully get him coming in from England online to talk about some of the tools in Edge Raider and some of the Ken Long stuff, which is pretty cool, that he's just developed. And then I'll have a couple of guests. I won't tell you their names, but I got 3 or 4 people in mind that I'm talking to. So more to follow, but I hope you can join me. This is the cheap meeting, and by cheap I mean it's $300 or $400, depending on where Greg will let you know when you talk to him. He hasn't told me the final number. We do it low cost. There's low frills. We don't water you. We don't give you sodas. You can buy your own, and that way people can come and not worry about the burden of the cost. If you're in my top-down trader group, congrats. I mean, I'm going to, when I'm not doing a launch, I'm not going to be posting these videos every day on YouTube. But right now, because of the launch and because of the seminar, I'm doing it on YouTube as well. But those that are in the top-down trader group that actually buy the tools get a discount. So you join something for free, and you get something back. So we did launch webinar 2. Now we're going to do a deep dive into top-down trading starting Saturday, 10 a.m. The link will be below. That's Eastern Standard Time. I get good reviews on these things. I don't have the energy of Rob Hoffman, but I'm also a lot older than him. But I'll stay for 3.5 hours. I'll go through my journey of trading and why I do what I do, and I'll answer your questions, and hopefully you'll leave maybe not smarter, but you'll certainly leave more comfortable with using the various tools that I use. And then don't forget, Friday morning we have the monthly employment data. That'll be market moving. So I think anything we say about the market today is fine, but I think the data is going to be important. And then you got this guy named Powell speaking at 12:30, and Fridays for the most part of late have been weak. We did have a tease a couple weeks ago where Friday was strong, but we'll have to see if Powell doesn't sink the market. There are a few earnings left in the morning, as you could see here. There are some big ones after hours, and probably the one that maybe, I won't say saves the market, but Broadcom is up 16.3%, Gap's up 15%. Um, and you can balance that with Lunar as their lander on the moon may have disappeared, down 29%. I was concerned about Costco, but they're only down 1.2%. So right now, nothing big hanging over the markets. I think LUNR is a smaller company and not one that's going to sink the markets. Yesterday in my live video, I talked about one stock that I was going to be looking at, and I think I just want to start with this because I was pretty clear of how I handle something like this. And the reason why I was interested is because we pulled down to support and we had a nice day, and this day would have been on Wednesday. Now, there is nothing beautiful about this chart. It's pulled back to the 200 and moved up. It still has negative relative strength in OBV. Yes, it had an early signal to CPR turn. And what I said is if it trades above the high of the session, I might take a small position. I think the mags are going to come back. I don't think the mags are dead. And then what happened in the market on Thursday is it opened lower, traded lower. I never got filled. And so that's why I like to buy stops above the price. Now, some people I know, and this is nothing wrong with that, put their buy stop below the price because they want to get it cheaper. Now, they would have been filled today, and they'll get into it much lower than I am. But I think they have a bigger risk that it goes down from here. So just a philosophical difference. Let's start with the daily brief. So if we look at performance in the market, it was, could I say ugly? Would that be a good word? VIX was up, VXX was up 10.9%, closing at the top of its range. Really a bad day. Diamonds down over 1, Russell down 1.53, Spiders down 1.78, and the Qs were down an additional 2.75%. That is a horrible day in the market, and they bounced a little bit off their bottoms, but not much. You look at new high, new lows, and even yesterday on the video where we had a decent day in the market, I commented that bulls are not built on new lows, and we have more new lows than new highs on the NYSE and the NASDAQ at multiple time frames. Over here, there's no blue because no sectors in the S&P 1500 were positive. Only 22% of industries and 32% of stocks were up. The NASDAQ looks like it had one sector up, 18% of industries were up, and 33% of stocks. And the NYSE, one sector up, 27% of industries, 31% of stocks. This was not a stock picker's day. The markets were punished. Now, I want to show you something that I'm scratching my head. And this is another thing, and I'm going to call this a divergence in kind. I have a good friend down here in Florida. His name's John Person, personsplanet.com. And he's spoken at my live meeting several times. I've spoken at his. Good friends actually going to dinner with him and his wife Mary on Saturday night. And John's the real deal. And I use a lot of his stuff and when I do Confluence. I use my stuff and I use other stuff that I think is good. We've talked about Sager a lot. John has these things called PPS buy signals, and they're pretty darn good. And I was like, ran my scans today, and you could see his buy 4, which is a daily buy, new daily buy with no other requirements. Despite the market that was horrible, he had 178 new daily buys. Typically on a day like today, there's 10. And when I looked at daily sells with no other requirements, they were less. So despite the fact that the market sold off hard, he had a smaller amount of sells than buys. Um, that's interesting, and maybe that's telling me something about maybe the underlying market is starting to firm up. If we look at performance, one-day change of the S&P sectors, was anything up today? Yes. Energy and staples, followed by healthcare, and then materials, probably led by gold, was down just a bit. But when you look at the markets, technology down 2.78, real estate down, discretionary down, they didn't take a whole lot of prisoners. The market sold off hard, as you could see by the major ETFs. From a category perspective, something that looked interesting, and we'll take a look at them. Let's take a look at them right now. Some of the home building stocks, let's just take my big list here and just drop my 2-day momentum because I noticed they're all sitting here. So a couple of home building stocks, Lennar. Come on, Lennar. Horrible looking chart. Okay, but notice the relative strength that OBV turned positive. It had volume breakout and momentum. Has to get above the 50, but it's starting to move. Um, DR Horton, same thing, starting to move. Green brick or grape brick or whatever this is called, green brick, same pattern, starting to move. Pulte Homes, looks like the others, doesn't it? And then how about let's see, Meritage Homes? Already took out the 50. And then MHO. Something's going on with home builders. And what made me look at those, besides the fact they showed up on my scan, was on the daily briefing, they were the best performer today. Well, that's interesting. 1.28, China, lithium, discretionary, Chinese discretionary, Norway, clean tech, renewable energy, and some of our favorite things that we might be looking at in a growth market, cannabis, leisure entertainment, semiconductors, Dow Internet, blockchain, software, digital health, cloud. These were the worst on the day. So really, again, rotation out of tech and out of discretionary. A rough day. If we look at the buckets, we shifted back to the left, although only 20%, 21, 21, and 16 are below the Bollinger Bands. Not a signal that we're going to rebound, but I just sense, and especially those John Person buy signals being more buys than sells on a weak market day, that is a divergence in itself, and that's something that again I was a little bit surprised about. My market breadth tool, you could see a breakdown of the NYSE, kind of an equal and opposite to what we saw yesterday. A further breakdown in the NASDAQ, and these are daily charts. I don't think the weekly ones are turned on yet. They're not. We're getting to a point on stocks above the 20, the 50, and the 200 that correlates back here with when the markets have reversed in the past. So I do think a reversal is coming. Can we keep on dropping? Absolutely. Sure, the NYSE could come and visit the 200. I just get the sense, and especially when I pointed out the John Person signals, that maybe we're near something. And then if you look here at new high, new lows, advanced decliners, and up-down volume, they were negative across the board, and no new breadth signals came in the markets. If I look at ratio charts, you'd expect defensive to look better, so staples turned around, industrials turned around, utilities not as much, technology's bad, healthcare turned around, discretionary's bad, communications holding up well, financials has given it up this week. Interestingly, real estate didn't rally despite what we saw at the home builders. Materials are strong, and energy picked up, something that we mentioned in yesterday's video. If I go into the market ETFs, let's just open them up one at a time. So the spiders, they didn't break down today. I mean, they traded back and they closed lower than they've closed in this pullback, but they're still holding above the 200 day. And do you notice the high-low jump is at minus 100? We're at a place you expect to bounce. That's one of the things that I saw in my review. So spiders down on the daily chart, down 1.65%. On the weekly chart, you can see it's been a very difficult week. Let's see if we get the weekly to come on. Come on, weekly. I don't think it's weekly yet. Let me try that again. All right, well, maybe I booted the old version, not the new version. I've got weekly now. I may have booted the old version, which is fine. The old version is very stable. All right, so not really broken down yet. Let's look at the Qs. It's come down a lot, but it's still, this one's broken through the 200. Wouldn't it be nice if that's a false break and it heads higher in the market tomorrow? That would be great for the bulls, if there are any bulls left standing. The diamonds. No, the diamonds were down, but it's kind of an inside-ish bar. Still hanging above the 200. Nothing really changed today, even though it was down 0.9%. So these three are all in the midst of a pullback, but nothing dramatic happened, at least. And again, I'm still shocked about the John Person signals. Now, the worst thing is Russell. Imagine what happens if the Dow, the S&P, and the Diamond start to look like this. You'll have real pain in your portfolio. And again, minus 100 in the high-low jump. In fact, let's just look at here. Minus 96, I believe. Looks like 96.9. We'll have to do some formatting on that. 86 on the diamonds. Of course, it's not even down to the 200 yet. Minus 100, minus 100. The VIX. VIX had a big move today in the VIX futures. Clearly hasn't done what it did back here, but this was a big move in the market on Thursday. Is that going to be capitulation? It could be 13% move. And then the dollar dropped at the open, recovered a lot, but was still down 0.07%. And on the commodities, gold doesn't look like it did much, minus 0.21. Silver, similar, probably down a little bit more, 0.27. Oil disappointed after the hammer on Wednesday. Thought maybe it'd go up Thursday. It was down another 0.41. Natural gas doing what it's done multiple times, giving a little bit of a flag here. And then the 10-year and the 30-year open, traded higher, and they closed up 0.49 and 0.53, but they are definitely way off their highs. And I didn't show you the timing model, but let's look at that real quickly. And on the weekly of the timing model, it's going to take a really strong day for us not to have gone into a sell signal on the diamond. So we're in a sell signal across the board on the weekly, and I believe we're still in a sell signal across the board on the daily. Come on. And we've got to get above the WMA for that to change. So I don't expect that to change for a little bit. So my market timing model still says no go. I am still intrigued by those John Person, the PPS buys being so big compared to the sells. In fact, I'm going to ask him at dinner on Saturday night. All right, let's go into the layout. And let's go look at the top down and take off that thing here. So none of the sectors were up in the S&P 500, and we know that from none of them were up in the S&P 1500 either. The best performer was materials, then staples, and healthcare. Everything else was down more than 1%. One could look at the top three, the top one. So for example, if I open up basic materials, let's rank it by FM2, 2-day momentum. And I like this one that comes up to the top. I looked at it over the weekend. It's a fertilizer stock, Chilean stock, and I just didn't know if it was going to break out of congestion. If you look, both bongos are good. It looks extended, but I don't call a stock extended when it's The last bar was on the 200. You've got relative strength and OBV look great. It has a CPR, volume breakout momentum coming out of a squeeze. I like SQM here a lot, and I will probably be looking at this one in the market on Friday, especially if we rally. KWR, what is KWR? Quaker Chemical. Um, yeah, not that exciting. Balchem. I look at this and my concern it's too loosey-goosey. Pasco Holdings, no. Albemarle, a lithium player, no. ArcelorMittal Steel. With all the upcoming tariffs, what are steel prices going to do? I think they bought some U.S. steel capabilities. They're already getting extended. And unlike SQM, they're far away from the 200. Now, another thing I could have done here is just dropped in pullbacks and uptrends and 2-day momentum up. And the only one would have been SQM, which we liked already. Cool. So another thing that we could do is just say, all right, let's rank let's have the industry groups were up. Don't tell me you're doing that to me. All right, so let me reset this. So let's rank the industries by 1-day percentage change, and we could see that there were some that were up, but then it quickly turns to negative, and there's a lot more that were negative. One thing I like to do is just take the top 10. 1, 2, 3, 4, 5. Uh-oh. Well, I found that we have a little challenge here because when I did this, one of the industry groups doesn't show up. So let's skip that one. 1, 2, 3, 5, 6, 7, 8, 9. Let's get both of these. So the reason why I was having a challenge there is because I probably had a bad data set today, and that'll be updated over the night, I'm sure. So I took the stocks from the top 10 kind of groups, and don't know what that group was. I put them here. I can do the same type of thing. I could rank them by FM2, which is short-term momentum. Tree comes to the top. Lending tree, not that interesting. Deer, uptrend, pullback, and a breakout. That's interesting. John Wiley, less interesting. Molina Healthcare. And there's your first of the housing that we saw, DHI. You know that, I showed you that before. I like the housing, United. Or I could just do the same thing and go pullbacks and uptrends and 2-day Momo up and hit OK and nothing. Okay, that's not a big surprise. Tough day in the market. So top down is looking at the top sectors. It's looking at the top industry groups. I'm sure we'll get that thing sorted out. And again, what happens is you get a data with null value. A null, and then it throws off that stock, and this is the industry group that the stock is in, and then we get the data cleaned up overnight. Let's go into the impulse indicator, impulse board, and this is all 3461. And here's where I like to play with filters, pullback and uptrend, price greater than 5, 5 greater than 500. I want the price above the 500, and I want my 2-day momentum. And we'll finish here. And right there is the stock that I like the best today, which is SQM. Here's CCK. Looks like this one's getting ready to break out. Tigo was one that we looked at over the weekend. Still don't even know what they do. But this one's moving up nicely. It looks like it's an international cellular play. So there's a couple here. If I pull back the above the 200, I add one. Fulgent, I think. Is that what that? Yeah, it's a healthcare testing company. Not that exciting. If I take off the pullback and uptrend filter, I start to see the housing. And I'm kind of intrigued. Again, Pulte, Meritage, Lennar, Centex. Oh, that's dark. Danaher's different. DHI. So there are some good stocks in this market. It looks like The home builders are wanting to move again. Be careful, just like with mags, bottom fishing can bite. But unlike mags, look again at the OBV relative strength, and the dots are supporting that something's happened here. So let me summarize my thoughts. Sorry I had that little difficulty with the bad data piece. I think the market is oversold here. G. I think we're due for a bounce, but we also have a data point in a Powell speech which says anything can happen. I am still mostly in cash. Um, I'd love to nibble some more. I'll see how we do at 8:30 when we get the monthly unemployment report. And there's nothing wrong with sitting on your hands sometimes when the market's this volatile. So I'll talk to you over the weekend. Once again, consider coming to my seminar at 10 o'clock Saturday. It's totally free. If you already signed up, you didn't. You have to register. I clicked the wrong button. I'll have the link below. Please go ahead and sign up again. Thanks, everybody. Take care.